So our third and last interviewee is Paul Carrozzo. And you're the director of Coindeavors, and you're also a journalist.
Yeah.
Bitcoin journalist or a journalist generally about tech?
No, it's about cryptocurrencies, digital currency.
How did you end up in cryptocurrencies? What's your background and how do you...
So I'm actually a trader. So I'm with a high frequency firm. So I have a lot of developers with me. And I think it was early 2010. And one came to me and said, you have to look at this Bitcoin. I don't know what this thing is, but it looks pretty cool. And I started looking at it and I said, well, it's $2 a share. And he said, no, this isn't a stock. This is brand new. It's called a digital currency. And he actually brought up Ven. So I'm looking up Ven on the internet. And I kind of grasped the concept. Well, within 2 weeks, it went from $2 to $15. And I said, okay, what do we do? How do I get my hands on this Bitcoin? So he said, well, we're going to put a computer in here. It's going to cost like $5 grand or $6 grand. And we're going to start mining. And I said, great. So we started to mine, and it went to 17 and 18. And I'm looking at different houses in Connecticut, and I'm saying, oh, this is going to be great because this is going to go to the moon. And it went back down to 3. And I said, okay, well, let's move on to the next thing, right? Well, needless to say, over the next year and a half, it went back up to $30. And I started reading about it again. And I said, wow, this is genius. This is genius from a political standpoint, let alone a currency standpoint. And like the other guys have explained, the protocol itself has really nothing to do with currency. Just like TCP/IP has nothing to do with email necessarily. But it's the highway, right? It's the highway for everybody to build the products on top that now you can watch a video and email it between each other within seconds, right? Well, that's the same thing here in Bitcoin. What it's the first use case is the currency because of the headlines of it going to $800.
$1,000.
$1,200.
Is it 1,200?
Yeah, it actually went to $1,200 for a brief time.
It's not £500, so I'm very comfortable. If I paid 10.
Yeah, sure. Well, of course that's going to become the headline because there's nothing better than seeing your money go from $10 to $1,200 on the plus. So with that opportunity also intended.
So let me, I mean, you kind of agree with David, but Coindeavors talks about, and I don't quite understand this yet, building the infrastructure for virtual currencies, not just Bitcoin.
Yeah, not
just. But I didn't get the Coindeavors thing, frankly. Maybe I didn't spend enough time. So what's Coindeavors?
Sure. Well, Coindeavors is a way to take this digital currency and allow people, analog people, who don't really understand technology, and allow them to walk down to the end of the block, go to an ATM, well, we don't call it an ATM, but what would be an ATM, and be able to access this Bitcoin. Just like you would going to get money out of an ATM, same thing. And then be able to turn around and go to the merchant and say, I'll pay you in Bitcoin. So that the merchant doesn't have 4% fees because he's taking a credit card.
I still don't get it. So what do you mean by infrastructure? What's the architecture?
Well, the first piece of the architecture is going to be actual kiosks that are going to go out to the world.
Okay.
Where you can actually walk up to and you can actually buy and sell Bitcoin at a kiosk.
So how would that, okay, I'm not sure I get that. Am I being dumb? So I walk up to the kiosk, I've got a wallet, one of these paid wallets on my wallet on my phone.
Sure.
And I can just buy and sell, okay, fine. But I can do that anywhere on the internet, right?
Well, you can, but now this is where I'm going to say that you probably have not done the process of actually going online, going to a place that you don't even know if it's real or if it's not, and I can say Mt. Gox, and I don't know if you guys have heard of Mt. Gox, but every time you go in and you're going to put your hard-earned money, and you're going to put it into a system that tells you in 4 days that they're going to send you back either Bitcoin or cash, I'm a little bit concerned over the counterparty risk, just like David explained before, right?
Yeah, the counterparty risk, yeah, I agree. I mean, you don't know who these people are. They're selling on eBay or everyone, right? But do you think that as exchanges become regulated, if they become regulated, then they become safe places to just use online and buy some Bitcoin?
I think we're going to get there. I think David's firm, along with other firms, are going to push us there. And I don't think it's going to come from one firm creating the marketplace. I think it's going to come just like equities did in the United States, where you had a bunch of Davids and Coindeavors and BitPays and Coinbase and these other major brokers that come together and agree to transact with each other, right? So if my ATM has, let's say, a million people come and they all want $10 in a day, well, maybe I'll turn to David to source liquidity, right? But I'm not going to source liquidity from 50 people that I don't know, because that's what the regulators don't want. What the regulators don't want is somebody to walk up to my ATM, put in to buy Bitcoin, and send it to the Middle East that's going to buy nuclear warheads that's going to destroy us. It's the bottom line. And there's certain things that we all can agree, being good people, good agents, there's certain minimum requirements that we don't want to have access to, right? Even on the internet. We don't want to see certain things on the internet. And I think we can all agree upon those. But what we're going to be talking about is a situation where you're going to take this decentralized currency, a currency that I can go peer-to-peer, whatever way I want to, for whatever reason that I want to, and you're going to put controls on that. And that's where you're going to have a pushback from the community, because the community is open source by nature, but so is the internet. So is TCP/IP. And that doesn't mean that I should be able to go on the internet and have my 4-year-old look at things that I don't want them to see, right? It's the same concept here. But you don't regulate the internet, you regulate access to the internet. Just like you don't regulate Bitcoin, and I agree, there's certain things here. But the point that I'm making is there's a precedent here for Bitcoin to be regulated properly, so that both worlds can live together.
Okay. And the only point I'd make before I move on is, cash is not regulated in the sense that cash remains anonymous, but the cash in the bank is. So, $10 bills are not regulated. They remain anonymous.
Right.
But clearly, if you put the cash in the bank, then clearly the bank has AML, KYC checks, all the rest of that going through it. So,
unless you're HSBC, then it doesn't matter.
Okay. So regulation doesn't mean that every single transaction is covered. It can still be a level of cash. But,
right.
So what do you think about? So Coindeavors would support Ven as well. Would it in-game currencies, a whole range?
Sure. Absolutely.
Okay.
So what Coindeavors is the face to bring the brick and mortar world to be able to connect and access digital currencies on any level.
Any currency?
Any level.
Okay, fine. But how do you compare those currencies? I mean, from some previous discussions we just had, it's all Bitcoin anyway, probably, or mostly. So is that how you feel about it, or?
Yeah, I have a very clear opinion on the direction that we're going to go with these digital currencies.
Okay.
I think Bitcoin, because of the headline situation and because people are starting to look at it, all these wirehouses are looking at it and they're saying, hey, there is something here. I think the financial institutions are going to wrap around financial products around Bitcoin and not necessarily have the liquidity for these other coins. So I think what's going to happen is Bitcoin is going to become the gold for the digital currency. Because again, and I'm going to lean all over David again, it's going to be futures markets and options markets and ways to hedge Bitcoin that you're not necessarily going to have with a Dogecoin or a Ven, because you need the counterparties to agree to transact in these more levered products. But once that happens, the asset managers are going to come tumbling in, and Wall Street's going to come tumbling in, and that's going to meet the demand of all these merchants that are starting to want to sell, right? So there's going to be more of a match there. But I'll give you a prime example. We have a group in Italy, and what they want to do is they're going to have games. So you can walk into the arcade and use one of their own currencies that you could buy with Bitcoin and use that currency in the game.
Okay.
So there is a huge value to that network for those quote-unquote points that they're using in the game. But you're not going to transact those points against dollars because the casino, the clearinghouse, whatever you would call it over there, is only going to interface with dollars with Bitcoin. So that's where I could see that they're both going to live in the same world.
Okay. So do you think because of Bitcoin's distributed nature, there are going to be lots and lots of exchanges, or a few monopolizing it? How do you think that's going to work? What's the structure going to look like compared to exchanges in, say, dollar, cable, whatever, conventional exchanges with fiat currencies?
Sure. It's going to come down to a trust level of your counterparty, right? So you can set up, see the exchanges that are set up today, they're not exchanges, they're brokerages, right?
Yeah.
So they're theoretically, I mean, Mt. Gox at its core is Magic the Gathering online exchange. They traded Pokemon cards, for lack of a better term. I'm a little bit older than you guys, and I understand Magic the Gathering is different. But for me, Pokemon cards. Okay. You take that and you put that against the best infrastructure products on the NASDAQ that could barely handle a Facebook IPO. And you're expecting a Mt. Gox to run that same business model. It's not going to happen. But they will have correspondence. They will have people that are going to want to trade there. Bitstamp will always have a certain amount of people that are going to want to trade on Bitstamp because they know their password, right? And they're not going to want to come to the exchange that David and I set up. Well, they're not going to be allowed to because their counterparty risk is too high. So I think it's all going to centralize around the major players and their understanding of their counterparties, right? And bringing it into one exchange. So it's just going to be a trust level, just like we have today. Okay. Like when you do a trade in the U.S. markets, it's Goldman Sachs trading on your behalf. It's not you trading with somebody else, right?
Sure.
And it just filters its way out.
Okay. So you think it'll be fairly straightforward to trade Bitcoin in any way you like, because the major players will adopt it and use existing infrastructure they have. So trading Bitcoin or derivatives of Bitcoin will be quite straightforward.
Absolutely, and very, very liquid. I think you're going to see Bitcoin USD right next to Euro USD, right next to Spiders, right next to GLD, being priced out on Bloomberg, without a doubt.
Okay, just coming back to your final question, coming back to your journalism. What are the latest hot stories for you? Last week, what's the hottest story for you?
Well, you know what's funny, because in journalism, a lot of times to get eyeballs, you got to do the bad ones. You got to put out the bad stories. You start the car wrecks, this disasters. You know what's amazing about this community? It's the opposite. When we put out a Mt. Gox is failing, it doesn't get any views. It gets nothing. And when you put out good stuff like what some of the guys are telling me about colored coins, and how they're going to use this blockchain, the viewers come piling in. So it's like, that, to me, that was the attraction to continue writing, because it's really, really so much fun. Because it almost is like you have this situation that everybody is kind of slightly oppressed by government around the world, the way it is now, and they see this light to just be able to deal with each other on a peer-to-peer level. And they see it and they go, well, that's how my information flows. Why can't my money flow that way? And then they're writing stories and people ask me questions, emailing me and stuff like that. And it's like, they're telling me different things that are happening, right? So imagine it just being like a store that's just exploding. And you don't know which piece is going to be the thing that's going to rock it. It's going to become like Amazon, you know? But I go to these meetups and you're looking at people and you're like, there's the next Zuckerberg. Like, I wish I could tell you.
Okay, yeah.
But you know what I'm saying? So you see it, and there's the next whatever, and it's Facebook and Twitter and whatever. And you're like, I'm sitting here with these kids, and you can see them, and it's, instead of it being like, you go and do this, and you're going to live under our rules, and it's just their minds exploding, and the connections that they make, and you could just see it growing, and it's so cool. And I just love writing about it because I wanted to becoming a central hub for information flow, and it's just cool to be like the guy to turn to like put people together, right?
We can find on Cryptocoinsnews, right?
Yeah, I'm actually the crypto analyst on Cryptocoinsnews. We've grown so fast that I used it as a handle like 3 months ago. And I'm probably going to just change it over to my name at this point. But
Okay.
yeah, it started off as a hobby, and now it's becoming pretty serious. But yeah.
Let's take some questions. Let's get that mic out. There's a question here before.
So with your infrastructure for your ATM network, do you see that as like the exchange networks kind of, I hear what you're saying maybe is like you see it going towards retail exchanges and then wholesale exchanges and then kind of like, the few big giants that, and then they're interconnected. Is that kind of what you're talking about?
Yeah, and I firmly believe that there's going to be one central hub that the media is going to need to look at. That's going to be a physical exchange. That's going to be in New York because that's where the financial world is. So that Bloomberg can walk in and they can talk to people and interact with these traders, because it's going to take it out of the darkness and it's going to put people right in front of this digital currency. And I think that's very important. And I think it's starting to happen.
And my next question is, where is the price of Doge going?
I think, based upon what I hear, there's 500 people at a meetup in a Dogecoin meetup. I would say 260 Satoshi, or whatever you would call it, is a little low right now. But you actually start to get into 80 and 90 million dollar market cap. You got to have some serious following to continue on. I mean,
Maybe just so everybody doesn't know, Dogecoin is a cryptocurrency that's based on a cute little Shiba Inu doll that has inner monologues in Comic Sans.
Yeah.
And it's almost worth $100 million.
Yeah.
Hi. Traditional currencies kind of came and became widely used before Wall Street and before they started being an investment.
What do you mean by traditional currencies? Fiat currency?
No, normal like dollars, whatever currencies, they developed through history by ordinary people exchanging and that way, and then the investors came. You see a danger with if Bitcoin does the other way around, where investors come in first. Wall Street comes in during 2014, he said, or 2015, and then it gets more widely used after that. Is there danger in the investors coming in before it's widely used?
No, I think the investing public here's the issue, here's where you are. What we have is, we have an infrastructure for merchants, because from a merchant standpoint, it's pretty quick and easy, because all you do is you put it in a key, like a credit card type of a swipe, and for the merchant, he just looks at it and he says, well, this is only going to cost me 1%, not 3%. But what they do is they don't hold that Bitcoin. They want to sell that Bitcoin. So unless you have investing demand to come and buy, these people that are selling this Bitcoin are just going to push the price of the Bitcoin lower and lower. It actually crushes itself as a currency, because I think this gentleman said, well, that's great, your father-in-law has this Bitcoin now, but when he spends it, what is that next person going to do? Right? And a lot of times these merchants are looking at it and they're saying, well, I'm just going to sell this Bitcoin. Well, now the investing public, the key is why would the investing public even want to be there, right, on a grand scale? But there are many reasons, because one of the major reasons is when you're moving away from fiat, because you know that everything is getting devalued. So when you hold a dollar, you know next year that dollar is worth less than $1. So what people started to do is they dove into gold. And that gold was, okay, now I understand that I have gold and this thing isn't going to lose value because I can take it out of the bank and I can, oh yeah, I can't really do anything with that either, right? So now you're looking at it, you're saying, the price got to 1,200, and once the price gets to 1,200, all of the gold miners just go and mine more. So now they're looking at it, investors, and they're saying, if I hold this dollar, it's just getting devalued because Bernanke is just printing, right? Yellen's going to just print. And now if I go to buy gold, every time I buy, they get more out of the ground, right? So the investing public loves Bitcoin because it's an inherent storage of value that can't go past 21 million coins. And that's the draw. So when you're saying, is that going to kill it? It's actually going to make it more valuable to the world. Because instead of the only people interacting with this are hobbyists or merchants that want to sell. The investing public now has a storage of value that's far better than anything that they have today, being fiat gold or whatever. I mean, I actually heard of an asset manager looking to do diamonds. I mean, literally diamonds, because the hedge risk is it's a lot harder to get diamonds out of the ground than it is to get gold out of the ground, especially at the prices. But now you're looking at moving diamonds around. I mean, it's getting to the point where Bitcoin is the perfect storage vehicle if you want to store value. So I think that's actually the tipping point that's going to push Bitcoin to, 5,000 and 10,000.
So what's the tipping point?
The tipping point is actually Wall Street, the investing public, seeing this, which they already do, but just being comfortable with storing their value in Bitcoin.
You don't think it's going to make it, at least in the beginning, more about volatile by having people invest in it before it's widely spread? And I'm thinking that the wide use of a currency kind of has a stabilizing effect on it. Why? So if it's not widely used before people start investing in it, it's going to be more volatile.
I see your exact point, and it's a great point. But there's actually, before you get people to buy spot, you're going to have these hedge vehicles in there. If you have futures and you have options on the equation, it doesn't matter really how volatile it is, because the investing public can look at that and they can hedge that risk. That's what takes any commodity and pushes its value higher, is because if the investing public can hedge that risk out by buying insurance on that spot rate, then it doesn't really matter where it goes, because you know that your downside risk is established. And that's not there right now. But that is going to be there, because those products are in the process of being built. And those counterparties are in the process of working with each other to honor those trades in US dollars and in euro and in these. So the reason why I kind of jumped it was because I included that in my theory, but that's what's going to come first. What's going to come first is those hedge vehicles. And that's going to force the investing public in. And once they're in, you're now going to have Bitcoin go from 800 to 10,000. But it's not going to be so dramatic and volatile, because of those hedge instruments will slow down the volatility as it's going. If that makes sense.
Yeah. Okay, I'm going to close there. Paul, thank you very, very much. Thank you.